Hello everyone, thank you for joining us today. For the last many years we've seen significant amount of volatility in markets, and I'm sure investors and partners will be confused on how they should be investing. So let me start with a parlance of what is happening currently. We are in the midst of FIFA World Cup, and when you see the FIFA World Cup matches, you see many of the matches are won because of the efforts of a single goalkeeper, could be because of a striker or could be because of a defender, and each match is telling you that each segment, whether it's a striker, defender, even the goalkeeper, can play a very important part in making sure that the team wins. Similarly, when it comes to the world of investing, there are different asset classes which are part of investors' portfolio. It could be equity, could be fixed income, could be commodities with gold and silver, and could be international equities. Each of them have different performances during different cycles, and because of performance of these various asset classes, the performance of the portfolio can change. So for creating a strong product which can perform across market cycles, it is important to have a good mix of asset classes as part of the portfolio. To decode the world of multi-asset investing, I'm very happy to have Harshad Buravke join me for today's discussion. Harshad is Head of Research and manages our hybrid strategies. So welcome, Harshad.
Thanks for having me here.
So Harshad, we were discussing on the importance of various asset classes as part of investors' portfolio, and multi-asset gives you a good flavor, that it gives you in one portfolio a mix of equities, fixed income, gold, silver, and international markets as well. Why do you think multi-asset is an important part of investors' portfolio?
Sure. So I think multiple studies have shown that the timing any asset class is the most difficult thing to do for any investor.
Sure.
You can do it for some time, but doing it consistently is very difficult.
Absolutely.
So in that context, I think diversification is one of the thing which is control as an investor in your control. So I think multi-asset allocation funds play a very important role in diversification. So here, as you know, we have multiple asset classes like equity, debt, also arbitrage positions, and we have commodities. In our fund, we also have REITs and also option to invest in the foreign equities.
Sure.
So I think clearly, as an investor, if you have to, typical investor, if we have to invest in equity or debt, not necessarily, they will think in terms of asset allocation. At one point in time, they will think about equity. At one point in time, they will think about debt. But it's very difficult to think for them, collectively. So I think multi-asset funds plays that role in terms of thinking about it collectively. And I think the most important part is, the behavior comes in between when you want to change, sell equity, sell debt, buy debt. So here I think for multi-asset funds, at least for our fund, because it's a framework driven approach, so the emotional parts is taken care of.
Sure.
And the second important thing, if an individual investor were to change between the asset classes, there are tax implications.
Sure.
And in multi-asset fund under the mutual fund category, I think this is the most efficient way to invest in different asset classes. Yeah.
No, fair. Harshad, so I can in simple terms, in cricket terms, we can say it's an all-rounder. Lets you play across various sort of market caps and cycles within asset classes within the same product. Harshad, we've seen that in the last year or so, all asset classes have been under pressure for some different reasons. So equities went through a tough time for the last couple of years.
Yeah.
Gold and silver, which used to be the safe haven, in the last couple of months have seen a very sharp correction. And fixed income, we saw a very sharp spike in yield, and again yields have also eased down. Considering that we've seen volatility in all the three asset classes, can you share your perspective on all the three asset classes and your outlook for them while investing in this product?
Sure. While not always it happens that all the asset classes do well at same point in time, for all the asset classes do bad. But obviously last year was one such year, but I think, mind you just have to keep in context that prior to that, let's say 2 years back, equity had a good run up.
Sure.
Gold, silver had a very good run up last year. Similar for debt. So maybe I think after a good run up in these three asset classes at different points in time, so some correction, time correction is bound to happen. Mean reversion happens everywhere. But for us, the way we looked at it on the multi-asset fund, so we stuck to our framework.
Okay.
So we didn't really get carried away by just because one asset class is doing well, so we would invest higher in that, or if somebody does bad, we get out of it. So to that extent, I think sticking to the framework helps. That's point number one. Coming to outlook, I think let's take one by one. So first on the equity front, so it's almost I think more than 20 months where time correction has happened, particularly for Nifty 50.
Sure.
We are yet to reach the September 24 highs for Nifty 50, right? What changed in between? I think particularly last 2 quarters, if you look at corporate earnings have been picking up,
Sure.
So what government did on the taxation, on GST, RBI cutting rates by 125 basis points. So all these factors put together have resulted in earnings coming back. But for last 2-3 months where you had this Middle East conflict, to that extent energy prices went up.
Sure.
And if you look at higher energy prices, India's higher import dependence, then we are at a disadvantage at that point in time. But as we speak, I think oil below 75, it is one of the most positive thing which could happen. So I think equities now, after a single digit growth for the last 12-14 quarters, now if I were to look 2 years forward, we are looking at a double digit growth.
Sure.
If you look at consensus Bloomberg estimates on those, I think now Nifty is available at less than 18 times 1 year forward.
Sure.
This is a significant discount to long term average minus 1 standard deviation.
Sure.
So I think first just to conclude on equity, I think according to me valuations are very reasonable, earnings wise things are looking much better, and if you look at our own multi-asset funds, we also increased our equity position. So equity, I think number
So the
one,
uncertainty is out of the way.
Yeah.
To a large extent.
Coming to debt side, see again, the way we look at our the way we manage debt within the multi-asset, while it's typically buy and hold strategy, but again to the extent possible we do keep it more dynamic. So while we invest more into G6 and AAA, but right now in the current context, what we have done is that we have taken more of a duration call. That's what we have done on the debt. And lastly, on the commodities, I think last 1.5 year had a good run on the commodities, right? But if you look at last 2-3 months, so given that there was a sharp rally both on the gold and silver, so we have slightly reduced our position on both gold and silver. While as the luck plays out, I think it has worked well for us, at least in the near term. But going forward, I think we are more, I would say, structurally what we believe is that gold sits in a better place from the risk reward perspective. While silver could be more tactical call what we will do. Gold, as you know, has a store value. So to that extent, I think we would, if correction happens more, we could add back gold in the portfolio. But silver, it more depends on what happens on the China, because silver, as you know, is a consumption metal.
Sure.
So it is important how the China manufacturing if it bounce happens or not.
Sure. So Arshad, now what segment of investors do you think is more appropriate for multi-asset, and how should they approach investing? Staggered, or they can do even lump sum investments?
So frankly, I think it's not that multi-asset or hybrid category is good for one set of investors and pure equity is good for other set of investors. So I think this, according to me, is good for all types of investors. But the only difference is one should not expect returns similar to equity. The returns will be more between debt and equity because of the construct way
over a long period
of time. But I think for the investors typically who are looking at FD plus kind of returns, at the same time they don't want volatility similar to equity. So I think on a risk adjusted basis, and I would say on a peaceful sleep adjusted basis, this is one category. This is, I think, typical those kind of investors should look at multi-asset funds.
Sure. So, like Harshad rightly pointed out, investors who even want to start investing, first time investors who are looking at more tax efficient ways of investing in all three asset classes, and considering that the outlook on all the three asset classes, equity, fixed income and commodities, look positive from a 1-2 year forward perspective, multi-asset is a beautiful category that investors can look at for allocation. So thanks Arshad for joining in today and sharing your perspective on multi-asset as a category.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.